Have got riots in the streets taking place over the central bank digital currency and the contraction and the attempted elimination of cash. Now, look, we've been doing some extensive reporting on the implementation throughout the globe of central bank digital currencies. We just did the report a while back on what the Bank of International Settlements has to say about crypto and its attempt to destroy that and bolster the central bank digital currency. And we've also talked recently about how the UK has already forecasted how much money they're going to let you have. Okay, you're just not going to be able to have as much money as you want, walking around money. No, they're going to limit that. And they spelled it out in a report that we did, and I'll link to it later on in this report that we're doing now. So we've got to understand that this is coming to a country near you. They are trying to implement these central bank digital currencies in order to have much more control over your life. And if you doubt that, again, I always encourage you, look back to 2020 and the wake of that and how really the authoritarian streak in these Western democracies really reared its ugly head, right? Up in Canada, they're supposed to be, so polite. That's their stereotype. We're polite. Not bad as stereotypes go, right? Well, they had Justin Trudeau come and say basically, no, you don't have the right to free speech and protest. And I understand Canada, they got a different thing going on with regard to free speech than we do here in America. I get it. It's a different country. But he decided quite unilaterally that what he was going to do is if you supported a certain protest that was going on up in Canada at the time, he was going to shut down your bank account. And in many cases, he was able to accomplish that. Now, think about how easy that would be if the government owned the central bank digital currency and there were no impediments. You didn't have to go through a private bank. You could just hit a switch and bam, your money is throttled. And what I mean by throttled, that's a telecom term. When you think about bandwidth, when you want to throttle it, you slow it down. So if someone is using too much bandwidth, you throttle it. All right. If you're using your money in such a way that Justin Trudeau doesn't agree with, or you've said something that Justin Trudeau or one of these other authoritarian wannabe dictators out here in these Western democracies, they don't like it, they can throttle your money. Now, I know that some of you are new here. We've talked about this ad nauseum. We're going to continue to talk about it because it's coming to a country near you. Now, the latest on this is Nigeria. They're actually out in the streets protesting this. They're just not having it, okay? Over in the UK, when they announced that they were going to set up the system and they were studying the system that was only going to allow you to have access to so much money at a time, I've been monitoring it and I haven't heard that there's any pushback. But what the Nigerians have done is they're really strong arming this, and their government has said, we did a report on this, that we're going to take banknotes, physical currency, out of the system. And this is causing a problem. Violent protests in Nigeria reveal that getting average people to embrace central bank digital currencies might be more difficult than government officials would like to admit. Nigerians recently took to the streets to protest a cash shortage caused by government policies adopted in order to push the country into the adoption of its central bank digital currency. So they're trying to corral the public by, first of all, taking money out of the system, pretty much making it impossible for increasingly impossible for Nigerians to be able to conduct business day to day because they're finding it difficult to acquire physical money to do it. Protesters attacked bank ATMs and blocked streets, and demonstrations turned violent in some cities. According to The Guardian, quote, Nigeria has been struggling with a shortage in physical cash since the central bank began to swap old bills of the local Naira currency for new ones, leading to a shortfall in banknotes. So they're doing a brute force approach, okay? And they're just saying we're taking banknotes out of the system here. I had a guy disagree with me on what the UK did a while back when they said to me, this seemed like an experiment. What they did was they created what they're calling new polymer notes. And they said, listen, you got limited time to turn in the old 20 and 50 pound notes for the new ones. If you do not turn in your 20 and 50 pound notes, there will come a time where those notes are no longer legal tender and they won't be able to be used. Okay. I had somebody vehemently disagree with me on this. Oh, that's not happening. And I showed him the website from I think it was a chancellor of the Exchequer's site where they were explaining this. And to me, that looked like kind of an experiment to see, okay, if we take, if we trade up one currency for another, how will the public accept this? Now, so far as I can tell, the British citizens really just complied with it and it wasn't a problem, okay? So it probably won't be an issue when they go to switch from physical currency or the polymer note into the central bank digital currency. But the Nigerians, they're not necessarily doing the same thing. They're not saying, okay, well, yeah, we're going to switch out notes and you got a certain amount of time to give us the old note for the new note. No, they're saying we're just taking notes out of the system. According to reporting by The Guardian, the protest erupted when bank customers could not access their cash or change old banknotes for new ones. Okay, so that's a major difference between the policy of the UK and Nigeria. And I hope that I haven't lost people here in America because I'm talking about Nigeria and the UK. Because guys, these countries are at the vanguard. They're the canary in the coal mine. This is coming westward, all right? Tensions ratcheted up when the government set a February deadline to change old notes, okay? The problem is there aren't enough new banknotes to go around, and that appears to be on purpose, all right? And Bloomberg is calling this policy demonetization. According to the Associated Press, the Central Bank of Nigeria introduced the redesigned notes last fall of 2022. The plan was to recover about 85% of the total currency in circulation outside the banking system. Now get this, the Nigerian Central Bank said the policy was implemented to remove counterfeit currency from the system and to discourage cash ransom payments to kidnappers and other criminals. So this is what they do. Remember, over here in America, Janet Yellen, what's his name? Jerome Powell, even at one point, they poo-pooed the idea of cryptos because they said, oh, this can be used for illegal purposes. And I'm sitting there thinking, well, hell, lady, cash has been used for ransom, for illicit drug deals, for weapons deals. The dollar bill the greenback rather, has to have been the note or the method or the currency most used for criminal purposes over the last century, simply because it is the world's reserve currency. So that's a lame excuse, but this is the same kind of one they're giving out in Nigeria. There is an underlying reason for the new policy that The Guardian only mentions in passing. The policy was also to promote cashless transactions by limiting the use of cash for businesses. The Associated Press report also noted that the central bank said the policy would help make digital payments the norm. What these corporate news outlets failed to report is that the Central Bank of Nigeria Governor Godwin, I'm having trouble with this gentleman's last name, Emefiele, said, quote, the destination, now listen to this, this is their Jerome Powell, okay? The destination, as far as I'm concerned, is to achieve a 100% cashless economy in Nigeria. Now, Nigeria is a member of the bank, that their central bank is allied with the Bank of International Settlements, just like all of the, central banks of these countries. The issue isn't just banknotes and swapping them. In December, the central bank limited cash, and we did the report on this. They limited cash withdrawals to 100,000 naira, and that's $225 per week if you convert it. That's for individuals, and 500,000 naira for businesses. That's 1,123. So look at how they're throttling there. They're saying you're not going to use cash. You ain't using cash. We're going to transfer you to this central bank digital currency. All right, now some might ask, what is the difference between a CBDC or a central bank digital currency and Bitcoin or some other crypto? The difference is that the value of the digital currency is backed and controlled by the government, just like traditional fiat currency that you might have in your wallet right now. The Central Bank of Nigeria launched its CBDC called the Naira in the fall of 2021. Last October, Bloomberg reported that only 0.5% of Nigerians had adopted the digital currency. So it's not ready for prime time. They're not accepting it. They don't want it, okay? Ironically, about 50% of Nigerians do use cryptocurrencies, such as Bitcoin. It's not that they spurn digital currency, they just spurn the government's digital currency. And that's why we're seeing this war going on between the central banks and these independent cryptos like Bitcoin. And FTX didn't do them any favors with that whole thing because they kind of destroyed some of the faith that people have in cryptos, although the issue with FTX was the collapse of an exchange, not necessarily the concept of crypto. And this is coming from someone who's not, I'm not a devotee of crypto. Somebody asked me in the comments why I was so hard on Sam Bankman-Fried. They said, you must have lost money with FTX. No, there was no way I could lose money with FTX because I don't invest in crypto. No, I just think that Sam Bankman-Fried is scum of the earth and allegedly has caused a lot of people to lose a lot of money. Central Bank of Nigeria Deputy Governor Kingsley Obiora said people just need, quote, a little push from the government, unquote, and they will embrace the Naira. A little push from the government always sounds kind of scary to me, right? The government tried several schemes to incentivize the adoption of their CBDC, including offering a 5% discount to taxi drivers and passengers. It also lifted a restriction that required people to have a bank account in order to use the Naira. Why are they trying so hard? If it's so good, you always have to be really suspicious of anything that is trying so hard to get you into it. If this thing is what the government says it is, shouldn't it just sell itself, right? Okay, Ferrari, I've never seen a commercial for Ferrari. It sells itself, right, if you got the money. Plenty of products out there just sell themselves. But when it comes to government, they usually operate on the principle of, we got to make you do it. East Germany, they built a wall to keep people in their socialist or communist paradise, okay? They kept you into their communist paradise with a wall, and in between the wall there were landmines and all kinds of barbed wire because it was so good, right? But with those soft approaches failing to achieve the desired results, the government turned to more coercive measures. All right, so Nigeria has been limiting bank withdrawals, limiting the money you can have, okay, all that good stuff, because they want you in this CBDC. Because once they get you in it, they got you. They're going to be able to control you. They want to get you into this cashless society idea, okay? Oh, it's safe, convenient. It's more secure than, physical cash. Somebody could hit you upside the head and take your cash. Well, the government is going to hit you upside the head, okay? And they're going to do more than take your cash if they implement a CBDC. And we're also told it will help stop dangerous criminals who like the intractability of cash. But there is a darker side. The promise of control. The elimination of cash creates the potential for the government to track and even control consumer spending. Digital economies would also make it even easier for central banks to engage in the manipulation of monetary policy. Nigeria isn't the only country experimenting with CBDCs. We've told you that China, India, the UK, even us over here in the US, yes, we are experimenting with it as well. In terms of that monetary policy, think about this. Right now, Jerome Powell, the Fed, they're increasing rates. Well, if they had a ubiquitous central bank digital currency, all the government would need to do, all that central bank rather would need to do, is just put a limit on how much you could spend in order to control the amount of money out there in the economy. And businesses would love that because that wouldn't necessarily be raising the interest rate, okay? So they wouldn't have to pay more to borrow. It would also help the Fed because they would say, hey, we can now control the amount of money in the economy and we don't have to raise the interest rate, and therefore the government doesn't have to pay any more money on its debt, okay? That's another thing that would benefit the big players but really hurt us down here at our socioeconomic level. Imagine if there was no cash. It would be impossible to hide even the smallest transaction from the government's eyes. Now, I know some people are saying, well, you shouldn't be trying to hide anything from our government. Well, what about somebody who gets tips? The lady has 3 kids. She gets a tip. She gets a $5 tip. She doesn't record it. Okay? Do you think? Let's say she goes through her whole life and does that. Now, I'm not advocating that, of course, but let's just say that happens. Do you really think that if they would have been able to get that money, it would make a dent in the $31 trillion debt that we have right now, which is going to be $50 trillion by 2032? Something as simple as your morning trip to Starbucks wouldn't be a secret from the government. As Bloomberg put it in an article published when China launched the digital yuan program pilot in 2020, digital currency, quote, offers China's authorities a degree of control never possible with physical money. Think about this. Your insurance premium. Think about if insurance companies could pay to have access to this data. And so they said, wait a minute. Okay, he got 2 donuts over at the Dunkin' Donuts this morning and a large caramel iced latte. And he's done this for the past 3 weeks. We might have to go in there and, raise his rates because now he's at risk. Okay, this is, but believe me, okay, look at the world today, all the things that are going on that you didn't think were possible 20 years ago, even 10 years ago. The government could even turn off an individual's ability to make purchases. Bloomberg described just how much control a digital currency could give Chinese officials. And look, let's not just focus on Chinese officials. If you put this technology into effect, it's going to have the same capabilities no matter where you implement it. The People's Bank of China has also indicated that it could put limits on the size of some transactions or even require an appointment to make large transactions. Some observers wonder whether payments could be linked to the emerging social credit system, wherein citizens with exemplary behavior, as defined by the government, are whitelisted for privileges, while those with criminal and other infractions find themselves left out. China's goal is not to make payments more convenient, but to replace cash so it can keep closer tabs on people than it already does. That's basically what America has in mind also. So look, guys, I have dropped in here some tags that you need to check out these videos because this stuff is coming to your country. They're going to try it. We'll see how successful the Nigerians are. Not even a full percentage point of the population has adopted this thing. We'll see what happens. They're trying to force it. The Fed actually did a survey here, and about 66% of the people who responded, they weren't really happy about the idea here in America. And this was a survey done in conjunction with the Fed and the Cato Institute. The most common concerns were over financial privacy, financial oppression, and the risk of disintermediating the banking system. Now, check out this report. This is the one where we're talking about how the UK plans on limiting the amount of cash that its citizens can have access to under a CBDC. This is a trend, guys. This is developing. You need to keep your eyes on it. Guys, I'll talk to you soon.